Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. This is part of the first and only global virtual incubator accelerator in the world. And 1 Million by 1 Million's mission is to help 1 million entrepreneurs reach $1 million and beyond in revenue, build $1 trillion GDP and jobs. This is our 260th 1M1M roundtable. This is the 260th free roundtable. We have probably an equivalent number or more of those in our private sessions premium program. So, you know, we've been doing this for a while and have accumulated a lot of experience, and, you know, we see a lot of entrepreneurs, and you have given us the privilege of being able to assist you in your journey a bit. So thank you for that. If you're live tweeting the show, please use hashtag 1M1M. If you would like to follow us, maybe you already do, our Twitter handles are at 1M by 1M, and mine is at Romana. And this roundtable, as well as all previous roundtables, will be available at our YouTube channel, 1M1M Roundtables. These are the call-in instructions. We will put these up later on. So as you are going through the program with us today, please file away your questions, and we will get to them later on in the program. Now, this session is part of the continued celebration of the 12th volume of the Entrepreneur Journeys book series. It's called $1 Billion Unicorns. The book came out in January, and we've had, one guest after another, people who are in the, so to speak, unicorn ecosystem, whether it's on the investor side or on the entrepreneur side. We've had many entrepreneurs in the program already who have built unicorn companies or in close to unicorn level valuation situations, and we've learned a lot from them. Today we have the privilege of having Dr. Ashish Gupta, one of the very early venture capitalists who went into India. It was a long time ago. I've known Ashish now for a long, long time. Ashish, it's great to have you. We haven't talked in a while. I was really looking forward to catching up with you today. So we're just going to do a public catching up, I guess.
Well, thank you. Thanks for having me over. And yes, we will also catch up more in private. But for now, yes.
Okay, so just to give you a bit more context, Ashish and I met when Ashish had done already Jungli before that, which Amazon acquired. And then I met him when he was about to set off, I think, for India to start Helion Venture Partners. And then we connected a few times after that, after he launched Helion. And, we were trying to understand the India opportunity where it came to entrepreneurship. And my blog happened to be a hangout place for a lot of Indian entrepreneurs. So, we had a lot of very interesting discussions over the years. And today, as you know, the Indian entrepreneurship ecosystem is very, very alive and thriving. India has become one of the top entrepreneurial activity hubs in the world. So, Ashish, you are on the ground there. I'm still based in Silicon Valley, and even though we do a lot of work with Indian entrepreneurs through the program, it's one of our largest geographies. You have a special insight. So maybe let's start with you giving us an overview of what are the highlights of the Indian venture capital industry right now.
Sure. So I'll talk about the Indian entrepreneurial ecosystem first, because the venture capital industry is strictly dependent on and a subset of and subservient to, at one level, the entrepreneurial ecosystem. Without that, there is nothing for people like me to do. So what has happened, and just for context, Helion is about $600 million, and we are managing 3 funds in India, and there are now 11 of us. There are 6 investing partners and 5 operating partners. So we are fairly operationally heavy on the ground. And the vast majority of us, 10 out of 11 people, are ex-operating guys. So our perspective also comes from a very heavy bias towards operations. including 4 startups that my colleagues and I in different configurations started. So there is that bias also. So the experience in India, when I first started investing in 1999 to now, it's been about 16 odd years, the rate of change in India has seriously accelerated over the last 4 years. It was getting better in fits and starts for a while. Starting 2006, it started getting better much more steadily. But starting 2011, 2012, it has just completely taken off. And when I say it, I mean both the quality of entrepreneurs. So, for example, in 99, 2000, you would meet people who would metaphorically talk about how they've got a new, interesting networking box and they're going to take on Cisco. The appreciation for the value of distribution and sales was completely missing. Today, you meet entrepreneurs who are as sophisticated as anywhere else in the world. And the young entrepreneurs in particular are both as well informed as entrepreneurs in the Valley and hungrier because they have not seen even a fraction of the wealth that a lot of people have seen here. And the energy levels are actually, in many cases, much higher because several of them are driven by seeing real problems around them. And as a result, they relate to those problems in a much more visceral manner than, if you will, third-order derivatives from an applications perspective. So we are still solving basic problems from a U.S. comparison perspective. For example, selling clothes, enabling taxis, taking some bit of education online. So we are still in, if you will, the version 1 problems of how to move basic stuff online. And that is easier for everybody to relate with than something which is a lot more esoteric. And so you see that energy level at levels that are just absolutely incredible. So the few noticeable things that have happened, Shramana, one is the average age of the entrepreneur has come down massively, maybe from the mid-30s to the early 20s, just within the last 3 years. It makes people like me feel even more older than I already am or feel. And so that is one. And 2, the level of sophistication of these entrepreneurs has increased significantly. Third, they are moving into areas that we had not thought would move into. So they're going after global plays in very large numbers, which 3 years ago would have been unthinkable. They hunt for investors across the board. So I've actually moved to the Valley because we have enough presence in India, and we find that several of the entrepreneurs are looking for a U.S. connect in both consumer and enterprise players. That's another part that has changed. And then on the venture ecosystem, one of the other things that has changed very recently is the arrival of very large amounts of money because India feels and is the last bastion of a massive market on the planet. And as a result, a lot of people want to not be too late to the party. And that is a more recent phenomenon in the venture ecosystem, and largely prompted by the arrival of a smartphone. So among the many things that Steve Jobs can be credited with, I think he can be credited with unlocking the Indian internet market also, because smartphones have truly brought India into a place where internet adoption is just on fire right now. So those are some of the things that come to mind.
So, springing off your comment about huge amounts of money coming into India, it's all relative, right? Even when you started in about 2006, it was started Helion in about 2006, right? It was still, even then it was kind of like a too much money and too few deals situation, right? Fundable deals, because at that time, actually, the product entrepreneurship ecosystem was still very nascent, and there weren't really a lot of fundable deals. That is not the case anymore. There are a lot more fundable deals, and as you said, the entrepreneurs are more sophisticated, and there are more global plays starting to happen. But commensurately, there's a huge amount of money again going into India, so the situation of too much money chasing too few deals still remains, isn't it? And it's true about Silicon Valley too.
Yeah. So about $3 billion got deployed in India in venture over literally 7-8 years, just to put the number in perspective, which actually is a fairly small amount of money given the opportunity set. So let's go back to 2006 for a moment, and then I'll address what is happening right now. In 2006 was, in effect, the third coming of the venture industry in India. The first one being 1995-96, which didn't last very long. 2000 lasted slightly longer, but the echo of the bust from the valley kind of took the wind out of the boom relatively quickly. So that lasted maybe a year. And 2006 was the third coming, which has proven to be, at least in my view, the real creation of the venture business. Absolutely. And the first two were precursors or failed attempts, so on and so forth. And at that point in time, a lot of the money that was coming in was because several of us had believed in and sold the story of China in India. And that truly was a little out of whack, because India and China are still nowhere close to each other from a size perspective. And that time we definitely were not, when you factor in technology adoption. But it was The Economist, Wall Street Journal, everybody wrote articles about it, so we all were drinking our own Kool-Aid. And a whole bunch of money showed up there, including a lot of U.S. investors who were the tourist investors, if you will. So one of the things that has happened is all the tourists have gone home. Now, pretty much all the money that is on the ground, and I'm referring to Series A, by the way, Series A, seed, that kind of stuff. That class of money is very much first-class firms on the ground in India and pretty much nobody else. The tourist investing is now happening at the later stages, and that is where you find what I like to call comfort investments. So if one is coming in from the outside and is going to deploy some bit of cash, one is looking for typically a growth stage company because that is comfortable. There, indeed, valuations are out of whack, in my view. If you look at Series A seed, there is actually not an excessive amount of money compared to the opportunity set. There are barely a dozen firms, Shravana, which is very ironic. If you look at India from a Series A and seed perspective, it is hard to count even 12. And there the supply of money actually, as most entrepreneurs will also tell you, is far lower than the opportunity set that is out there. And that you will find over the next 2-3 years that it will increase. As of now, it's not sufficient.
Seed ecosystem in general has been slow to evolve, and part of it is because the culture is not a heavily risk-prone culture. So, it's good. That one is going to take time to do anything with, and as a result, as you know, my mantra has been to address that problem has been bootstrapping. So you basically, and Indians tend to be good at bootstrapping. They are scrappy, they are frugal, and just culturally and DNA-wise, they don't have this tendency. I'm not saying they as in a broad billion people, but at least enough people have good values in terms of being frugal and being capital efficient.
Yeah, very much so.
That equation kind of works out. And I think it is going to be something that will stand India in good stead in the long term. All these entrepreneurs learning to bootstrap or being forced to bootstrap is going to give them a lot of advantage because they will be able to get to the Series A with much stronger credentials.
Yeah, and the angel ecosystem has also taken off in a fairly meaningful way over the last year and a half. So if you look at India, the rate at which it is changing, pretty much any comments I would have shared with you 2 years ago are subject for serious revision, because just in the last year and a half, about 15 new seed funds have come about, all with smaller amounts of capital, and the number of angel investors has exploded. To your point, however, the checks that are being written are such that it pretty much is tantamount to bootstrapping, and therefore one finds a fair distance covered with fairly little expense. And you see the kind of salaries that are paid to engineers by the Amazons are reaching, Amazon.com, are reaching levels of $30,000 per annum. And in the very same office building, you will find, most startups can't afford the office building that Amazon is in, so I take that back. In the next office building, you will find an engineer of equal talent who's working at 10 times less because they're passionate about it. And that is one of the other very interesting things that is hard to wrap one's head around when you go to India is that for the same quality talent, you might find a factor of 10 different in the salary that they are commanding, whereas in the US, you might find a factor of 2 different or 3. And that is a very interesting phenomenon which allows smaller companies to get much, much further ahead while coexisting with richly paid engineers also.
Also, I think it's just it is also an evolution. This was not the case some time back. Startups had a very hard time attracting talent. Now that has changed. It's become sexy and cool to work for startups even in India, and I think that's a very good development.
Yeah, you're absolutely right, and sexy is the word. In fact, I recently wrote an article giving some assurance to the people who are not in startups that unlike the valley where somebody who's not working in startup is looked upon as a gargoyle, that one doesn't need to start worrying about that phenomenon, because you don't necessarily want people to become entrepreneurs just because it's sexy. It exacts too high a price from everybody concerned. But you're right, it is getting that way very quickly.
What is your current investment thesis? Let's kind of look at the future, and of course we've kind of got a little assessment of what's happening today and a bit of historical perspective. A couple of points to kick off that discussion. My observation is that the e-commerce market is very frothy. It's, compared to the size of the Indian e-commerce market, the amount of money that is flowing into that segment is completely off the whack. And then on the cloud side, actually, we've seen some very interesting companies, including global players. We have a bunch in our portfolio, including a breakout one that's Freshdesk. Other companies like Dhruva have also broken out very nicely. InMobi is probably the first billion-dollar unicorn out of India, tech unicorn out of India. So there is activity. InMobi is not cloud, it's ad tech. So that's, where are you seeing the opportunities today? Where do you see the next 5 years to be?
So our investment hypothesis was in 2 buckets, Shamna. One was looking at India from a domestic market perspective, because the Indian enterprise does not spend too much money. So we are looking at domestic plays that are driven from a consumer perspective. And we are looking at global plays that are enterprise focused, because India has a fairly deep understanding of technology products thanks to back development offices from all kinds of companies, whether they be Cisco, Yahoo, NetApp, McAfee. Everybody has product management being done out of there and engineering. So our thesis was global enterprise from India and domestic consumer from India. These have formed the bulk of our thesis, and that is continuing to be fairly attractive. Within that, if we dig deeper, mobile first, in my view, is something where you will start seeing global consumer come out of India also. And that is because mobile is the dominant way that the Indian consumer accesses the net. As a result, the Indian entrepreneur is thinking of things that are only mobile-centric and actually further ahead than several other parts of the world, including the US, where the US entrepreneur will still think of both the desktop and mobile. When they build applications, the Indian entrepreneur thinks only mobile. So as a result, you have seen some very interesting companies come out of India. For example, you would have run into Zomato, which is a Yelp competitor in the rest of the world, not yet in the US, but they will very soon be in the US. And Yelp better watch out because...
Highly overvalued company, Ashish. I've covered Zomato. This is ridiculous.
Yeah, absolutely. So I think the valuation versus the value proposition, that disconnect, one is paying for a future-looking thing. But if you look at the product, you will find that actually in the markets where both Yelp and Zomato have gone in, Zomato is winning that game, whether it is London, whether it is Johannesburg, whether it is a whole bunch.
This is a sector that I think the business model is fundamentally unattractive, both for Yelp and Zomato. That's a category that I personally do not like.
So we'll see how it plays out. Company is close to profitability. So, and part of it is because a lot of the inside sales gets driven out of India, which is also what you're seeing play out in the enterprise sales piece. So jury is still out on some of the pieces that you mentioned. Is the valuation out of whack? A bunch of people would argue yes. I happen to be one of the crowd that does believe valuation is out of whack. Is the value proposition out of whack? That I believe.
Fine, I think. The value proposition is fine, but not everything that is a good value proposition has a good business model. That's the issue.
And there probably you and I will choose to disagree on this one. And of course, time will tell. If we agreed on everything, it would not be as interesting a conversation. So this is another one to get deeper in when we meet. So if we look at those kinds of plays, which are mobile first, we have a company called MoEngage in our portfolio, which is going against Urban Airship, Kahuna, and wherever it competes, it actually wins. Now, it doesn't compete in as many places because the company has got to figure out its sales, which is one of the interesting challenges for companies coming out of India. When you come out of India, go after a US market, you relocate to a new country, how do you sell in those places where you need direct touch? How do you sell where you need inside sales is much better understood. When you need feet on street, the jury is completely out. Whether Indian companies will actually figure out feet on street sales in India, in my view, is absolute work in progress. That includes several other companies that we take very seriously. Dhruva, for example. I think whether they will get the feet on street model to actually succeed here is work in progress. And of course, my best wishes are with all the entrepreneurs, but I would be presumptuous to say that battle is won. It is a completely different skill set that people have to develop.
Selling for Indian companies, especially companies coming out of India who sell in using inside sales either into the large enterprises or to SMB. In particular, SMB has been a very, very solid opportunity for Indian cloud companies to penetrate global markets with. That the SMB market has a lot of headroom. You know, in terms of the next 5 years, 10 years, 15 years, that is a market that there's going to be a lot of technology that will be going into that market. And that's where I think it completely aligns with India's strengths. And building global cloud plays in that space is a very interesting opportunity.
Yeah, especially in those products which are fast follower products. So we are still not world-class in product management or user interface. But if there is a fast follower opportunity where one can literally learn from the leader as to what product to put in, that becomes a very, very interesting example of what you're calling out, Shramna. SMB focused.
Multiple times, right? The whole Zoho story. Zoho is a CRM product. And I you know, even though I'm very good friends with Sridhar, and he's one of the most original thinkers I've met in the business. But the truth is, Zoho would not have been possible had Salesforce.com not built that market.
Yep. And one would argue Freshdesk is similar. Zendesk charted the course, and Freshdesk says, well, I will chart the same course, just faster. And cheaper. Very, very true. And cheaper. So especially a variation of the fast follower notion of the space that you're calling out, I think is very, very attractive.
You know, by the way, everybody who's listening, one of the products that I think is ripe for this kind of disruption is Marketo. Marketo is an expensive product that needs to be brought down to the SMBs at an affordable price point. Same with HubSpot. HubSpot is an expensive product, even though they sell to small businesses. But if you could drop the price on HubSpot by, 10x, that would be a fantastic offering for the SMBs. Other thoughts on your investment thesis, Ashish? What else looks interesting right now?
So I will go into controversial territory right off the bat, Shramna, given the e-commerce point that you were making. vertical e-commerce is another area that we are actually quite keenly interested in. So we've recently made an investment in a furniture company which actually does not sell you movable furniture, but actually takes care of the fixed furnishings in a house, cabinets, kitchens, and so on and so forth, highly technology powered. We are looking at brands. For example, one of our companies is a company called Yepme, which does branded clothing, which is not so much a retail play as much as it is a branded apparel play, only online. So think of building Gap, but only online.
Private label, yeah. I'm actually quite contrary to what you think. I'm very bullish on niche e-commerce globally.
Got you.
I love e-commerce. I think it's a great business model, and niche e-commerce monetizes extremely well. It's very possible to build vertical brands in niche e-commerce. So, I mean, I have a book on this, Web 3.0 and e-commerce, the evolution of the Internet. So, absolutely.
Oh, good. And so this is one area which we are quite excited about. We have started looking, but more from a forward-looking perspective, and put this in the hypothesis category, at some global consumer mobile-first apps. So the intuition being, if you consider something like Snapchat has come about because enough people are experimenting with enough ideas, as opposed to because there is a fundamental technical breakthrough. India is not ready yet, in my view, for technical breakthrough products. While we have a few good technologists, we don't have the density needed to build many technology infrastructure products. However, there is enough of a density of both entrepreneurs and now consumers to throw many pieces of spaghetti on the wall vis-a-vis consumer experiments. And the consumer is very similar to your point. Facebook is Facebook of India. YouTube is YouTube of India. So the consumers are already in tune with how consumers here think of digital assets. So that is one area where we've started experimenting, but not made any investments yet, which is consumer plays, mobile first, that look digital.
Yeah, and we have a company in that space that it's a very good entrepreneur. It's a complex, really complex play. It's the company is called Avaz. It's in the origin of the company is in autism apps, communication apps for autistic children, and part of it is there isn't, other than in mobile commerce, messaging, and gaming on the mobile phone, there's not a whole lot else that's monetizing very well. So the question is, are we going to be able to come up with non-messaging, non-mobile commerce, and non-gaming apps that are going to monetize and create new user experiences? This is the question mark that I'm kind of trying to find examples of where there would be interesting new experiences, new types of business models, and new types of things. Yelp on mobile is very successful, but monetization is not that great. That's the issue.
True.
Any other concluding thoughts? I know you're staying a little bit at least for the mentoring, so we're going to look at some entrepreneurs together.
Yes. So I will stay for a little while. I was mentioning to Maureen. Concluding thoughts. I think I'll just give you an interesting anecdote. This company that I mentioned, which is in the furniture space, it's called LiveSpace. They have relocated a team from Italy, a team of designers. And there are now 10 Italians that are living in one of the enclaves in Bangalore. And this is just a very interesting example of something that I've started seeing more and more so, as to how many non-Indian entrepreneurs have begun to gravitate to India. So your earlier point about are the investors coming, frothiness seems to have extended not just in the investor community, but also in the entrepreneur community. And it is very interesting to watch. And Bangalore is fast becoming, in my view, the disproportionately larger hub of technology-centric entrepreneurship in India. So for those of you who visit Bangalore, I think it is an ever-changing landscape. Go ahead, Shramana, you're saying.
Please touched on one of my absolute hot buttons. I don't know if you read my Vision India 2020 book back in 2010 it came out. It has a lot of these ideas of moving, Italian design and French design. If you want to build really, really world-class brands in fashion and luxury in particular, I happen to understand these categories quite well,
Well, you have a call coming, okay.
And those guys, the Italians and the French and the Belgians, do a very nice job of that. So it's something to. Indians generally don't do that well in those categories. So
no.
So it's a fantastic marriage of skill sets to be able to combine those two categories of talent and really come up with global brands. That brand opportunity is really, really very, very strong. So I'm delighted to hear that you're already seeing some of that happening.
Yeah.
Okay, so folks, we're going to start talking to the entrepreneurs now. Our first presenter is Vinod Rathi. Is Vinod on the call?
Yes, Shramana, I'm here.
All right, Vinod, tell us what you're working on.
Can you hear me?
Ashish is going to be here for at least half an hour, so we can hear you. Ashish, can you hear Vinod?
Yes, Vinod, loud and clear.
All right, fine. Thank you so much. Shramana, hi, I'm Vinod. I'm from Aurangabad, Maharashtra, India. And I'll go to the first page, the next slide, please. Basically, we have a company called Crescendo Transcriptions Private Limited. So in here, what we do is we have, like you all do transcriptions in US. You all listen to audios and then transcribe them on paper. That's what we do here. The only difference is we have a capability of listening to all Indian languages, regional languages. That is, it can be Bengali, it can be a Bengali audio or a Punjabi audio, any audio, Hindi, for that reason. We listen to those audios, we translate that in our mind, and then type it on paper. So basically, this service is, transcribing Indian language audios into a readable format. Post this, we have another service which we do is we provide analysis on the content which we gather from these transcriptions. So this is a broad, view of what we do. Now, the next slide, please. Shramana, our customers are basically, on a broader scale, I would say anybody who records an audio or a video to basically gather insights later. For example, right now for me, this session is very important. So what I'll do is once you give me the recording, once you all upload this, I would transcribe this on paper. So that, I can read it at my pace, I can understand what went there, I can read between the lines, I can gain a better insight. So this is basically, a customer for us. Now, coming on to segment-wise, someone you were saying something, or should I continue?
I was asking what applications, sounds like market research is one. Please keep going.
Right. Okay. So market research, the whole market research place in India is one of our biggest clients. They use these transcriptions for their qualitative studies. Now they go throughout India. They do around 100 interviews for a study across India. Some in Chennai, some in Bangalore, some in Mumbai. So these interviews are best done when they are done in the regional language, so that they can get the best input from the respondents. So similarly, they do focus group discussions, they do telephonic calls and stuff. They give us these recordings and we transcribe them, give it back to them on a piece of paper. These market research companies then collate this data, or they get it collated by us and then make their final reports. So basically, the qualitative market research segment in India is our biggest customer. We are also seeing certain corporates using us for their webinars or trainings or seminars, meetings. So what they do is they send us those recordings and then get the transcriptions back from us, and then they share it with the entire group to get everybody on the same, a minute of the meeting kind of thing shared with everybody to get everybody on the same platform. So we've seen this trend coming up from corporate, even from government. We serve a government department in India too. So that is the next slide, please, Shravana. This was a broad view of the customers which we have. The next slide, Shravana, please. The pain points which we address. Okay, I saw a little late. I'm so sorry. The pain points which we solve is basically we resolve two pain points. One is the customer's pain point, those that is pertaining to market research companies or corporate or SMEs which need transcription. Basically, the first is they need a readable format for drawing meaningful insights, because they cannot go back and forth through the audio to get back to that point they want to listen to, and so it gets easier. Then second is some companies do try in-house transcriptions and analysis, but it often leads to compromise on their core competence, Ramana, a lot of times, because these are researchers who are very good at doing research, making presentations and stuff. So this when they do transcriptions or the first level of analysis which we do, often leads to compromise on core competence on their end. And then the third way of doing the service which we offer, transcription analysis, many companies, they earlier sent it to a number of freelancers, multiple freelancers. But again, coordination, and there was inconsistency in quality because it was done by multiple freelancers. There was no central point where the quality was being checked. So this is the customer pain which we resolved. Coming on to the people who work, the freelancers, I mean, freelancers did not get a continuous flow of work. It was always in spurts. Sometimes it was there, sometimes it wasn't there. The freelancers did not have a structured training, model wherein they, each transcript they did or each work they did, there was no feedback passed to them, because these market researchers are very busy. I mean, so they have hundreds of transcripts, hundreds of interviews to gather data from. So giving a feedback on each transcript wasn't possible for them. So this led to, at the end, this led to the freelancers not getting any insights on how do they develop themselves or where are they going wrong. And this was a big pain point for the freelancers, and they had to deal with multiple companies to earn a decent livelihood. I mean, 2 or 3 market research organizations as a clientele and stuff. So we resolved that issue also. We became, so Shravana, the next slide, please. So the solution which we have is, we have built a platform. On this platform, we have an incredibly trained pool of freelancers who work from home. These are all freelancers. These guys transcribe and analyze audios from, from multiple languages in a very short turnaround time. This is the solution which we offer. So the next slide, please, Ramana. At this moment, coming on to customer validation, we already have 10 clients from market research companies. Now, these are all the biggest of the names in the industry, like IMRB we have as a client, Nielsen is our client, TNS, Milverton Firefly, all the big ones, the 10 biggest 10 are our clients, and the average revenue we get per customer is 1 million INR each year. So that is per company, per client. Then corporates also, we have 20 clients. We have United Spirits Limited, we have ICICI Bank, we have Airtel, and such companies who use us for their transcription needs. The average revenue is just 1.2 lakh INR. This is per annum, Samana. And we have some individuals also who use us. There are again 20 individuals. Now these are individual researchers or HR managers, I can say. So they send us their human resource interviews. They send us their personal interviews and stuff also. So over here the spend which the earning which we have is just 22,000 per annum. So individuals are very less, in the share of our revenue. Now the use case, Samana, is simple. Market research organizations, users. Okay,
use case.
Cool.
You have 5 minutes. I'd like to get to some conversation, some feedback.
Right. Shramana, this is what I wanted to know. We'll just skip this slide and go to the next one, which I want your guidance there. I mean, do you think we're going good?
Well, the kind of company that you're describing. So tell us more about what is the business model. So you're talking about having an online platform. Is this like a marketplace? Does it follow a traditional marketplace business model? What is the total available market size in your estimate? What what are those? Oh.
Right. Shramana, the last I did a kind of internal thing 2 months ago, and the marketplace is huge. It's almost it goes in line with the market research, the whole market research market in India, which is poised to go at around 6 billion this year, 2015. And if we say the services which we offer, that is transcriptions and analysis, they are going to be around 200 to 250 crores INR this year itself. We are at just doing 1.26% of it right now. So the market is huge, but we are just able to capture 1% of it right now, and majority of it is now going to freelancers. The market is already there. We are kind of channelizing it. I mean, we're getting a platform wherein people come.
The question that I'm asking, and I'll try to answer that question based on what you said. You've got a $50 million kind of transcription services market as it pertains to market research firms, it seems like, and then your business model for your company is basically a percentage of that, because what you're doing is you're taking projects from larger market research firms or SMB market research firms and pairing those up with freelancers. The freelancers get paid by the market research firms, and you take a commission in the middle. That's your business model, yes?
No, Shramana. We build the market research organizations and we pay our freelancers. So basically, IMRB gives the work to Crescendo. Crescendo offers the work to freelancers. IMRB pays Crescendo. Crescendo pays it to the freelancer. That's the kind of typical business model we have.
Okay. So regardless, it's your percentage, what you get out of this is some percentage of that $50 million market.
Absolutely.
Your percentage could be 10%, it could be 20%. I don't know what your margins are in your relationship with the freelancers, but it's still a very small market. 10% of $50 million, the last I checked, was $5 million, which is this tiny market.
Right.
So that answers your question about whether you can raise funds or not. Small markets like that are not amenable to raising funds.
Absolutely. Absolutely. I got your point.
Can you build a $5 million business out of this? Yes, absolutely. You can build a $5 million business out of it, and it could be profitable. It could be a very nice business for yourself, and I think it's perfectly okay as long as you understand that that's the business you're building.
Right. Perfect. Shramana, the third point, has been a haunting place for us, actually, haunting question. I mean, it seems to be a very low entry, barrier market. I'm sorry, it seems to be a very low entry barrier market. I mean, whenever I go to somebody, they just say, anybody can get a team of 100 freelancers tomorrow and start up with such a kind of a thing. For us, it has taken us years. Sorry, please go ahead.
No, I think that's correct. My sense is that perhaps if you could turn this into an eBay-like place where the freelancers come in from all over India, and it's not like you're hiring these freelancers, but you create some sort of a training program that you could make a training and certification program for these kinds of freelancers, so that they go through this training. You could charge for it, and that becomes a business in itself, and then you get them to kind of use a marketplace model, an eBay kind of online model to connect with the SMEs. Those are the ways you could raise the entry barrier. Let me ask Ashish if he wants to chime in a bit.
I would echo Shamana's points about not necessarily valuing a business based upon venture capital investing. The vast majority of interesting businesses in the world are sole proprietorships / small businesses that produce very interesting cash flow. So the metric of a good business is not the amount of venture capital and therefore baggage it has attracted, but the amount of cash that it produces. So that is one question for you yourself to answer for yourself. As far as also, can anybody gather a set of freelancers? The answer is not so straightforward. I think to keep freelancers productive, to be able to deliver projects while there are freelancers, while you are taking responsibility for the projects, is a non-trivial skill set to put in place. So if you can actually make that work in a repeatable, predictable, high-quality manner, I would take that capability very seriously. And as a basis of a defensible business long run, can it necessarily lead to a large market? You need to solve the maths that Shamana was walking you through.
Right.
Does one necessarily have to be in a billion-dollar market to be a good business? The answer is not. It is when you mix in external capital that these larger market size requirements begin to creep in, and you don't necessarily need to bring in external capital if you can run a profitable business. It can still be defensible.
Very good point.
Right.
Very good point. And in fact, if you look at managing a team of 10 freelancers or 50 freelancers, that may be, a much simpler problem. When it gets to 100, 200, 500, 1,000, that is completely a non-trivial set of challenges. So if you become the million-pound gorilla of this niche, you will have defensibility of long-term defensibility. And you will have quality. So if you create processes for training freelancers in an efficient, scalable way, that will also give you lots of entry barriers.
Right. Perfect.
Okay.
Shamana, this has answered a lot of my doubts. Thank you so much, Ashish. Thanks, Shamana.
You're most welcome.
I'm good to go.
All right, good. Good luck.
Thank you so
Jordan
much.
Hyde from Toronto is next. Jordan, could you please unmute your line and tell us what you're working on?
Hi there. Thank you very much for having me today.
You're welcome.
So my name is Jordan Hyde. I am from Toronto, Ontario, Canada, and I'm the president and CEO of Goday.ca. Just before we get started, we are a financial technology company that is working on automating lending in the Canadian market. We've started with short-term, low-value loans. Similar in the U.S. would be a payday loan or a loan of a small amount of money over a short time period. And we started in 2012, so we've been working and growing the business since then. And we're currently a provincially licensed lender in 2 provinces in Canada. So with that being said, let's get started. Next slide, please. Thank you. So we are targeting customers in the younger demographic and servicing them with all online loans. So generally a demographic from the age of 25 to 34 years old, someone who is a bit short on cash flow and looking for an immediate need or solution to that cash flow issue. We target that by having an entirely online application through their smartphone or mobile tablet or their desktop computer, and we do almost an entirely automated application and approval process with fund delivery in as little as 1 hour, but generally the very same business day. So if an individual is in need of a cash flow solution, what we're really looking to do is automate the market. We came into this looking at something where we could do a lot of transactions, and that's why short-term and payday loans sort of was the start of the business, because there was a market need there. In addition to the fact that we could do a lot of transactions and build algorithms and statistic models based off of the transaction volume that we could get without a lot of startup capital. And so that's sort of what resulted in us starting this. Our value proposition: extremely fast, secure application, and transparent process for our customers. just a little information about our customers. Most of them come and see us because they have an unexpected or emergency expense. They're not, they've budgeted, but maybe they're a little short. Their car is broken down, something like that. They're coming to us for fast credit. Generally, these individuals can't or don't walk into a bank for one of a few reasons. Maybe they don't have great credit. Maybe it's been damaged through a life event or something in the past. Or, they're looking for something immediate, looking for something really fast. And what makes us a little special is just the segmentation of, looking at more than just third-party data. We've been in business now for 2.5 years, and through that time, we've really been able to grow our base of customers and gain a lot of other data that helps us to determine how much additional data we need to collect on an individual and what their risk profile looks like in advance, which is setting us out from storefront lenders, traditional bricks and mortar locations that would have an individual come into the store. So all of that is done online in a very short period of time. Now, if we could move to the next slide, please. Thank you. In terms of customer,
and you may have an answer to this later on in the presentation, but it's kind of top for me right now as I'm listening to this. Is this a peer-to-peer solution, or is this what is the source of capital that you are lending against?
Absolutely. So the capital that we're lending is provided by a Canadian financial institution, and they've provided that to us to lend. And then for ongoing growth, it is something that I would like to discuss later. We're going to need to gain other sources of capital, especially because we would like to move into other financial services solutions. But it is not peer-to-peer, so it is not from an individual, it is from a financial institution.
Okay, got it. All right, please keep going.
Thank you. So in terms of customer acquisition, you can see there from the slide, it's a little pushed together, but organic search has been a main focus of us in the past. One of my questions that I do want to talk about moving forward is, how we don't rely so heavily on organic search, but we broaden our scope to look at other ways of acquiring quality customers and the customer acquisition strategy. But it has been very focused on organic search, on creating a connection through our blog, email marketing, and only a little bit of paid search to date. But that is something that as we grow the business, it has to be a big part of our strategy moving forward. So I would like to talk about that. That's why I included this slide. If we can go to the next slide, please. Just a little bit about our customer validation. As of 2012, the market size in Canada was a $2 billion market, a $59 billion market in the U.S. Just this past weekend, there was an article in the Globe and Mail, which is a national newspaper here. They estimate that there are 2 million payday loan or short-term loan customers in Canada. So it is a sizable market. We had our first customer in October of 2012. We are still very much bootstrapping. We bootstrap to revenue. We're bootstrapping to profitability right now. And we've really been working on refining our lending model. Since August of 2014, our data analysts on our team published a new lending model in August of 2014, and since then we've had amazing results. Our bad debt percentage is actually about 7% lower than the industry statistics averages that we have. So we're really trying to target an individual that will repay and has intentions of that and is coming to us for reasons that would allow them to repay in the future, which is great for us.
What is your current revenue? What is the burn rate? What are the metrics of the business?
Absolutely. So as of February 2015, we were break even, and we continue to grow past that. So that's been really good for us. In terms of revenue, sorry, go ahead. Was there another question there?
No, keep going.
Okay. In terms of revenue, in the most recent quarter, the first quarter of 2015, calendar quarter, we surpassed $100,000 just in fees from lending, so interest fees on loan principal issued.
Okay. And how much do you have to pay the bank? So what are the
Absolutely. So we actually have it set up very similar to a line of credit. So it essentially is a line of credit. And so we pay a fixed interest rate on that however much of that line of credit we have outstanding. So I believe the rate is approximately 7% per year.
Okay. So what happens, or what does your P&L, what does the business model look like? You're breaking even, covering the bank interest charges and your operating expenses all together, right? So in terms of how much interest do you charge versus the 7% interest you're paying, what is the gross margin on the business?
That's a great question, and I have to look at the exact numbers to give you the exact percentage as it was last quarter. But it's not theoretically an interest rate that we charge. It is a fee for however long the customer borrows, and we do have a section that is essentially loan losses or provision for loan losses, so anything that is not collected. But when we have, let me just see if I have it here, 1 second.
That's okay. It's a question that you should ask yourself to understand the nature of your business, right? So kind of like, what is the effective interest rate, and at what price are you borrowing, and at what price are you lending? That's the business you're in, right? The spread between the two is the business that you're in.
So the spread would be quite sizable in terms of simply generating finance fees. We lend out for $21 in the province of Ontario per $100 borrowed. So that would have a very high effective annual percentage rate, but keeping in mind that there is a large provision for loan losses on top of that. But I'm not exactly sure of what margin we did in the last quarter, and I would want to get that exact number before saying it out. But I can say that
that needs to be one of the metrics to track is what is the effective interest. Anyway, so let's go to your questions. Want to talk about external financing? You want to talk about debt equity in your market? So what are the financial institutions saying? What is how interested are the financial institutions? Given your current line of credit, are they willing to expand your line of credit, the ones that you work with?
Yes. So actually, come July, we have a review, and they have indicated at the meeting last month that they are interested and able to increase that line of credit, which would over double it for us, which would be great, and it would allow us to grow, continued growth. I'm going to say over the next 12 months. But moving sort of beyond that, if we do really want to build a billion-dollar business or a multi-million-dollar business here, we're going to have to get multiple sources of capital, or we're going to have to get very large sources of capital and acquire customers in a measured way. And that's why my questions go together and open to thoughts on that of how we have both tied together in a good cost.
I'll tell you what I would do in your situation. What I love about your situation is that you figured out a way to bootstrap the business to break even. And that is a lot of discipline and a lot of execution savvy that you have expressed, which are great, which is great evidence for companies that are interested in working with you as an equity partner or a debt partner to see, which expands your options vastly. So what I would do is the question mark, I think, is still how do you acquire customers at scale? What is your customer acquisition model? What is your customer acquisition cost? And what is the lifetime value of the customer? This is not something that you have fully worked out yet. And the extrapolation of that into the earlier question I asked about what is the effective interest rate, what is the spread, and so forth. These are metrics I would try to get a very, very good handle on without involving any equity investor. You've got this line of credit. The bank is willing to expand the line of credit, and you have a very good relationship, secure, trusted relationship. I imagine there is quite a lot of capacity that this bank can provide you with to grow your business. So for the moment, I would not tinker with the supply side. I would kind of just work with your partner, continue to grow that supply side pool with the same partner, but get a handle on the demand side. How do you acquire customers? What is the customer acquisition cost? And what is the lifetime value of a customer? And what is the profitability of the customer? So once you get a clear handle on those, then you could take that model and go get another, 3 or 4 or 5 banks on the supply side to show that you can attract more suppliers. And all of this is doable in a bootstrap manner because you've already got the hang of how to do this on a bootstrap basis. Then I would include partners.
Okay. So really it's about getting multiple suppliers to the table and having a good value proposition in the state of here's our customer acquisition model, here's our cost per customer acquisition, and here is our expected value. And because the systems are so highly automated, we know that we can grow and scale this to an appropriate scale.
Right. So if you have the answers to those questions that I just went through, the whole list, raising equity is going to be a no-brainer.
Good stuff. So then if we do have time, there's one question about the customer acquisition model. This has been something that we've all been working on for a long time in our company. It is very difficult. Not only acquiring customers isn't the issue. We've processed over 40,000 applications the last 12 months. That's not the issue. It's acquiring high quality applicants that is the issue that we have, and that is what's throwing off our customer acquisition model in a few ways. Do you have any idea or ideas for us on great ways to target the high quality applicants? We know their traits, we know their characteristics.
I can help you with that. I would need to analyze your customer base a bit to understand what is the profile of the high quality customer that you have. Of the 40,000, which ones have turned out to be high quality, and what have you learned about them? Where have they come from? What is the profile of that high quality customer? And then absolutely we can help you figure out how to acquire those customers profitably.
Okay. That'd be great.
If you hang on, I will explain in a bit. I have one more entrepreneur to work with, and then I will explain how we work with entrepreneurs in 1M1M.
Great. Thanks very much.
You're very welcome. Very good presentation, and I'm thrilled to see what you've built here. Actually, both presentations today thrill me because both of you are effectively bootstrapping and delivering value, which opens up a lot of options for you as you go to the next level.
Thank you. Thanks for your time.
All right. Michael Katz, you're up next.
Hi. How's everybody? Thanks for the opportunity to let me talk to you today. So
Michael, where are you dialing?
I'm dialing from New York. So we're based in New York, but we have somewhat of a distributed team.
Tell us what you work.
So I'm the co-founder and CEO of Skipy. We're an online marketplace for durable goods, and we're starting with baby and kids gear. So the main problem that we're focused on is how do we bring efficiency to the secondary market with large goods. Next slide, please. So we believe that the existing marketplaces are broken for a number of levels, a number of reasons. Just connecting a consumer to another consumer is not enough to get sales friction out of the way. Because people are either can't be bothered to do something, or because the amount of work involved in actually getting value out of their products is it doesn't justify the time investment. So our approach is really to combine take two simple concepts that are proven, secondary marketplaces in e-commerce, and combine them. Next slide, please. The marketplaces, and we're specifically focused in the U.S. and starting with our own market. There's we're calling a very inconvenient spiral that creates a great amount of sales friction and keeps the vast majority of durable goods that are out there, and the larger and more expensive, the less they move, out of the reach of buyers, and then keeps also sellers out of the way. So the question is how to do that and how to do that better by while delivering value to to both sides, to the buy side and the sell side. Next slide, please. So again, the thesis is quite simple. If there's 60 billion probably non-captured market, where eBay, the largest player in secondary marketplace, is only 30 billion. There's probably several times that available. We're specifically focused in one category. We're being very targeted and proving out the thesis with ITP, which is this infant, toddler, and preschooler category. And the slide there just shows the total new sales, and then the amount of inventory that's coming online if the average life of an item is 4 to 5 years. There are about $3 billion of new goods that come into the market, with a limited amount of that inventory really finding a good outlet. Next slide, please.
So maybe I'm slow to catch your value proposition.
Sure.
Why is eBay not the right marketplace to liquidate inventory?
Because 90% of eBay's revenue comes from professionals, for people that are doing it, or enthusiasts, people that do this for a living or do this as a secondary source of income. It takes hustle. It takes a lot of work to sell things. You need to list. You need to respond to sellers, and then you figure out logistics. So once you actually sell something, if you're going to ship think of a bicycle or a pair of skis cross country from coast to coast, you need to figure out what that's going to cost you, who's going to pay for it, what's an efficient way of doing that. So there's a lot of inefficiency in that.
Category is a pure C2C category. It's not a B2C category.
So what we're doing is, instead of doing a C2C category, we're a C to B2C. So we're high touch, and I'll describe. Our solution, which is the next slide, is rather simple. What we do is you list the item on our site, and if it's within the SKUs that we carry, we pick up the item from the home. We schedule a pickup that's free. Item is picked up, so it's hassle, there's no completely hassle-free. And then in exchange, people receive, instead of waiting on a consignment model for the item to be sold, they get store credit. Store credit is a simple concept that people understand. And then they could, the other innovation here is that they can purchase not only any previously owned item in the marketplace, but also anything that's new. So everything that we carry that's pre-owned, we also carry it new. And we don't actually carry the inventory, but we have third-party fulfillment directly through the manufacturers. So effectively, people are getting discounts off of merchandise for new and for pre-owned. The other thing is that we're adding a QA, QC component to this. So it's not only about, the onerous is on one seller to the other, but we take the item, sanitize it, make sure it's safe, and then so it's more akin to what happens in cars, car industry with certified pre-owned. So we're essentially like a certified pre-owned. We're inventing this category that exists in electronics and other things for durable goods.
Okay, got it. So essentially doing something like what Real is doing in designer merchandise. They're basically taking used clothing, and this is designer clothing, so they're authenticating them and then reselling it on their website.
It's similar to that. There are a number of companies on the apparel side. So the one thing we do not do is apparel. So there's ThreadUp, Twice, there's Poshmark, there's also Swap. All these companies are closer to the consignment model. So the onerous is still on the seller. So if you have, and I actually became customers of all these companies to try out their service, there's still a great amount of sales friction. Even though it's really not that hard. You get a bag in the mail and you need to fill it up with clothing, then you send it. So the couple problems with that, one is that you still need to decide what to send, put it in, and send it out. And then if you get a cash payout, it's typically not more than 20% of what they're selling it for, and most of the time you have to wait for that thing to be sold. So it's not a great customer experience. The other problem is that in most of these items, the company cannot be making money because the cost of shipping both ways, plus sanitizing, plus merchandising, plus acquiring that customer would create probably a negative margin. So for that reason, we're focused on higher priced items and more difficult to move things. So baby and kids gear have the attribute that they're items that are short, have higher value and are used for short periods of time. And I think that's a good gateway, or our idea that that's a good gateway category.
So let me just kind of close the loop on what you said, what I said.
Sure.
So if you look at ThreadUp, there's no authentication really involved in that. That's just people who have used merchandise selling it to other people, right?
Well, they're not selling direct. No, they actually send it to they send it to the company.
And then ThreadUp cleans it up and basically rents it out, so to speak, or sells it, whatever. So those are the two
Correct.
models.
It's a consignment. Correct. Yeah. Mm-hmm.
RealReal is a very high-end, very high-priced category doing designer clothing. That's a very different.
Yeah, designer. Correct. Designer clothing, once you get to the high end of clothing, and Twice also, I think, focuses on high-end designer clothing. So you are getting a much higher ASP. But you also have unlimited amount of SKUs. And I think that there's a business there, certainly, if you could keep your average ASP above a certain threshold in clothing. Yeah. But again, the difference is that asking someone to take something, put it in a bag, and then go to the post office or go to the UPS man and send it out. In our experience, in our testing, it's still a lot of work. There's a huge drop-off from people. And the service of actually coming and doing it for you, so like almost like pizza delivery, the thesis is at least that would eliminate a lot of the sales friction.
Right, and that's exactly what, if you study the RealReal model, that's exactly what they do, but you have to have a certain threshold of merchandise. You need 10 items or more of their quality of designers, or the approved designers, let's call it, in which case they will send someone to pick it up. So your model is very similar to RealReal, and RealReal, by the way, has scaled very well. They're 100 million plus business.
Great. I'll do further research on them. I knew them offhand, but they weren't on top of my research list.
Parallel is because that's the most similar thing I've seen to what you're describing here in terms of the mechanics of the business, not the category, but the mechanics of the business.
Right. Sure.
Yeah. Okay.
And essentially we make money basically on the difference between the discounts that we issue and the price that we sell items at.
Okay.
And I think there's a couple more slides, but I'm not, maybe one more perhaps, just on the team. And that's just about our marketing strategy and our competitive set. A couple of the companies that we mentioned and why we're sort of on the intersection between product and service for a durable goods category. So we launched, to give you an idea of where we're at, we launched the beta product about 6 weeks ago. And that's the team through, and that's our traction. We have today 1 to 2 transactions a day. We've spent almost no money on marketing. And a lot of what we're doing is educational grassroots within the communities that we're trying to activate as we're perfecting the product, which still has a number of issues in terms of UX, UI, and uploading more catalog items. We're about 2,000 SKUs, and we want to grow that to maybe about 10,000 SKUs. And
do you have a customer acquisition strategy to support this?
A customer acquisition strategy? Mm-hmm. So it's right. So as I think it was in the slide previous to this one, it's an online and off, or that one, right? There's a very hyper-local grassroots offline approach that's supported by more traditional online marketing approach. So the offline, we're present in street fairs and festivals and school events and those kinds of things where we're interacting directly with customers, educating them and getting them to sign up and schedule free trade-ins right there, and which is very effective, but doesn't scale that well. But it's very effective in sort of activating a specific zip code. So we're doing this zip code by zip code, and then we're supporting that through our growing our mailing list and running promos of all sorts and testing different things out. It's a little bit early to say what's been most effective. What's most the encouraging KPIs that we have is that we're about 30% of our customers so far are repeating. Every customer has given us testimonials so far. So we're hitting a pain point for this demographic that's encouraging. But it's our average ASP is above what we expected. So we're close to $200 per transaction. But it's about volume and reaching scale. So we're not there yet at all, and we need to figure out exactly what combination of is going to work, and then how to put some fuel to the fire.
Okay, very good. Very good. So I think my points to you are the same as my points to Jordan, is that you need those numbers, some of those KPIs, customer acquisition strategy, customer acquisition cost, to scale that, lifetime customer value, average sales price, those kinds of numbers are what's going to qualify you for equity investments, essentially.
Correct. But what's a good data? I mean, question to you is good data set, because clearly a very limited data set like the one we have with a few hundred transactions is perhaps not meaningful enough. I mean, we know our acquisition costs right now and what our ASP is, but
for consumer businesses, you need a statistically significant.
Correct. So what would you? I know it's not science here, but more of art. But what would that mean for a business like us? Do you think?
You will know when you hit upon a repeatable customer acquisition strategy, and when you're able to see what is the cost structure of that, you will know.
Oh, okay.
And it's not easy to say that that's going to happen at 2,500 transactions or 800 transactions. I have no idea. You will know. If 800 transactions are happening, but it's completely scattered and you have no understanding of where these customers are coming from, they're coming randomly, that's one situation. If 800 customers are all coming from one type of campaign and you have a clear handle on what is the cost of that campaign, maybe it's, as an example, that's Google PPC, and this is the cost of the PPC campaign, these are the keywords, then you know you've hit upon something that is working.
Got it. That makes sense.
Yeah. So I think that's really your next step, is to figure that piece out.
Okay.
Okay.
Thank you.
Good. Good luck. You're going to need to go further before you can raise 1.5 million, I think.
Yeah. Yes. Probably. I mean, I have rounded up close to that, but I don't feel comfortable yet enough to close on it. I mean, it's not my first startup, so that I have good relationships with investors, but it's very early on. I mean, we're 6 weeks in. It's very early.
I would, especially because it is not your first one in. You know the pitfalls of going and raising money for a business that doesn't fully scale or validate and so forth. I would kind of give yourself the time to get a handle on those numbers before you raise money.
That's great advice. Thank you.
Good luck. Okay, folks, that concludes the mentoring part of the session. We're going to spend a few minutes. I'll tell you about how to use 1M, and then we are going to take questions from the audience. So line up your questions, and hopefully we'll have a chance to chat. And if you like what we're doing here, please bring serious entrepreneurs into 1M. Refer your friends, refer your fellow entrepreneurs. It's, you know, for us, your word of mouth is one of the best ways to find entrepreneurs who are serious and who are willing to put in the time and years of their life in building companies. And that's really what we're doing here, is helping people build companies. So everything you look for in terms of 1M resources at 1mby1m.com. You will find a very, very powerful blog with lots of very interesting entrepreneurs giving you advice about explaining their journeys, their stories, and giving you advice on what they have been successful with and what strategies and techniques you can follow. And I facilitate that process. So the Entrepreneur Journeys book series is an extension of our work on the blog, and that has generated 12 books so far. It's the next level of you know, resources that you can access, and each Entrepreneur Journeys book double-clicks down on a specific topic. You'll find all of them on Amazon Kindle. This is what the website looks like. We have tons of information to help you evaluate the program. We have lots of videos. These roundtables happen every week, 260 roundtables as of today. You know, close to 30,000 people have attended these sessions. These free public roundtables happen every week. You need to go to the link and register to pitch or to attend, and Maureen will make sure you have a slot. Perhaps not right on the day that you're looking for the slot, but would be soon enough because we are usually overbooked for the pitch sessions. And then we have the premium program, which offers you extensive methodology guidance on how to put one foot before the other on all core aspects of entrepreneurship. We have a great curriculum. We help you with business development, with strategy consulting, these kinds of sessions, but they're private, members-only sessions. We also help you with financing and media relations, and the whole thing costs just $1,000 annual membership fee, no equity. The $1 Million Club is a link that I recommend you go look at as a place where you would find some of the examples of 1M members, premium members who have reached $1 million in annual revenue. And you will also find an ROI analysis of the 1M value equation, $375,000 worth of cash plus 5 to 10% equity worth of value for just a $1,000 annual membership fee. So very high value program for very, very low, for a very low price. How to use 1M effectively is a link where you'll find a lot of orientation material. You know, my favorite way to explain 1M is that it's like a gym membership, and it's like an entrepreneur gym. You can buy a subscription, but you have to actually you have to use the machines and do the workouts to make progress and to get in entrepreneurial shape. And that's exactly how 1M works. The self-assessment is a page that you should go visit and kind of take yourself through these questions. These are questions that investors will ask you. These are questions that you should ask yourself. Other than that, there are pages after pages of information about the premium program, what to expect from the program, video FAQs, and so forth. There are case studies. So the curriculum is taught in core and electives, and we have structured the entire curriculum based on hundreds of case studies. We have over 600 case studies of successful entrepreneurs who have come to this forum and helped us build this material, this curriculum. We have their case studies, their advice, their lessons from the trenches, and then we've stitched it all up by topic and by issues and synthesized them in video lectures that I have put together. So the core curriculum has 7 major topics: bootstrapping, positioning, market sizing, customer validation, team building, financing, and customer acquisition. And then on the electives, we have a variety of different electives. Web 3.0 and e-commerce is one. Niche e-commerce is a very hot category, and as I said earlier, I'm very bullish about it. And the evolution of how the web is moving in that context is very interesting. Cloud computing and business solutions is a big category where we do a lot of work. Mobile, social, healthcare, IT, online education, all of these are elective modules. Our methodology is lean, capital-efficient, bootstrap startups. Even if you raise a lot of money, and the truth is, the company out of our program that has really broken out has raised $95 million. But if you look at the very beginning of this company, it followed exactly this strategy of very lean, capital-efficient, bootstrapped execution to validation, to getting the customer acquisition model figured out, getting the pricing model, business model, pricing model, all of that figured out before raising any money. And then we went straight into a $1 million Series A financing. Because they had all of that stuff, they didn't even do a seed round. They went straight into a Series A with Excel partners. So this, if you do bootstrapping right, it gives you an immense amount of options, and that's very valuable. It's very helpful. We do a lot of work in the media. We have a lot of clout in the media. Our own channels, media channels, are huge now. We, cater to a community of over 200,000 people. Just our blog, our email newsletter, our various social media channels, including LinkedIn influencers, are very, very strong. And we give you access to all that. You're welcome to use those channels to get the word out. This is part of your premium membership. You will be able to use our channels to get your word out. So Twitter, Facebook, LinkedIn, blog, all of those are available to you. We do have an affiliate program. So if you're an organization anywhere in the world and would like to partner with us to do entrepreneurship development in your area and work with us, we are happy to do that. Next few roundtables, so one more in May, and then all of June we have roundtables, so definitely book your slot. Vision India 2020 has $45 billion business ideas. This is a book that we published aside from the Entrepreneur Journey series. This is the 13th book from our brand, and that is basically an ideation book. If you haven't come up with an idea yet, I would strongly recommend you look at that book, and it will help you stimulate ideas and come up with something that you feel like working on that has some business potential. And then we have a 1M1M incubator in a box with which we work with other companies, investors, partners, etc., to do incubation work with partners. Books, again, the most recent ones in the Entrepreneur Journey series, $1 Billion Unicorns, which we talked about earlier, Carnival in the Cloud, Bootstrapping with a Paycheck, and From E-Commerce to Web 3.0, How to Leverage the Evolution of the Internet. That's it. We can take a little bit of Q&A time if you would like to ask questions either in public chat or if you want to call in. Either way is fine. Anybody? Questions, comments? No?
Hi, Shaman. Shaman, hi, this is Irina.
Irina, let me introduce you first before you say anything. If you have
Yes.
questions about the 1M1M program, the person to contact is Irina Patterson, and she's on the line right now. She requests that you email her first and schedule a time to talk. She will work with you both via email and phone, but there is a lot of information on our website, so she will often give you links that answer your questions, but she will also be happy to talk to you. Irina, what do you have?
I have a question to the participants. I want to ask them, could they please tell us how did they learn about us and what brought them in here, what they were trying to accomplish when they come here?
Very good question. All right, so people in the room, Irina is asking, how did you find out about 1M1M and what brought you here? What did you come here wanting to accomplish? And Ranjana, you have your hands up. Please feel free to ask your question in public chat or dial in. Go ahead, folks. Anyone want to share how you found out about 1M1M? Okay. for those of you who do not know what it is help a reporter out. So, you know, it's a service that journalists use to poll for stories. And we have a lot of, you know, as you know, we do a full journalism operation in 1M1M, the blog and all the syndicated material that we publish elsewhere. That's all available. That's a lot of the solicitations for that we do through platforms like Harrow and ProfNet and so forth. And so Michael, it seems, learned about us through Harrow. Dan Gudema says, learned about 1M1M from a local startup incubator. Dan, where are you located? When you say local, what is local? Where are you based, and what is the incubator that told you about it? Sunit Ghosh, Oracle 1M1M Entrepreneur Program, yeah? We have a partnership with Oracle where we do a lot of the incubation work for their corporate incubation program, and that's where Sunit comes from. Boca Raton from the startup Palm Beach. Okay, terrific. By the way, the slide that you have on your screen right now, Chris Carter, founder of Aproyo, has reached $1 million in annual revenue, and he came into our program through our partnership with SAP a couple of years back, and was a very successful member in the program. Has done very well. Anybody else? Questions, comments? Is anybody on the line waiting to talk to me? Rehan, hi Stramana, does a venture have to be live to be funded? Yes. The answer is a resounding yes. Concepts do not get funded mostly. Very few concepts get funded. By and large, I would say that is true. Ranjana, you haven't asked your question. You had your hand up, but you haven't asked your question. Jordan, you were asking about customer acquisition strategy. Did I answer your question on if you would like to work with 1M1M, how to do that? Are you all set? Murali Tap, can we get partners who can sell our SaaS product in India? I have no idea without looking at your business, Murali. I suggest you come and pitch sometime. Ranjana, I don't think I can hear you. You can at least say something. We can see if we can hear you, but so far I haven't heard anything from you. Did you dial in? Ranjana, did you dial in the phone, on the phone line? I have no idea, honestly. As you can see, there are a lot of people who were dialed into this call, and we did the whole program with people dialing in. I have no idea why you can't dial in. You're in Geneva. Honestly, I have no idea, Ranjana, why. Why don't you type in the question in public chat, and I will answer it. Manik says, I actually started one, generated revenue, but due to some issues with Google, it came to a halt, and I did not have more finances to continue with bootstrapping. Then I approached VCs with the numbers I had before coming to a halt. Manik, I can't answer these questions in vacuum. You have to present, and I'll be happy to give you my thoughts if you come and present here, and I will do my best to give you, informed guidance. And if you want more involved, relationship with 1M1M, please join the premium program, and we'll do everything to help you out. Maureen says it looks like only Irina and Jordan are on the line, so Ranjana, you're not dialed in. You have a unique and awesome mobility platform as a service, but not a single investor in India thinks that B2E is hot. That's not true at all. As you heard from Ashish earlier, that's the only thing that they think is hot. They think B2C e-commerce is hot. They think mobile only is hot, and they think business to business, business to enterprise is hot. That's exactly what they think is hot. So again, come and present. I'll be happy to help you. I'm sure you're missing lots of things. I'll be delighted to help you further. If you want to dive right into 1M Premium, please go ahead and do that online. You can sign up on the website. But without looking at your business, I cannot really do very much. Dan presented a while back, crowd. We are close to a live platform and have bootstrapped till now. We are waiting, but once we go live, what do you recommend we do in terms of capital raising? Dan, again, I don't remember off the top of my head your business, so it will be hard for me to comment without looking at the business and looking at the metrics of the business. But, this is what we do. We help entrepreneurs make progress and raise money and all of this stuff. So if you would like to work with us further, I recommend that you join the program. All right, folks, we are kind of at the end of the program. We are 6 minutes over time. So I'd like to close out the session for today. We'll be back here next week. So look forward to seeing you soon and talking to you and working on your business in one of the upcoming sessions. Thanks very much for coming. I really enjoyed working with all of you today, and I hope you also enjoyed listening from Ashish Gupta. Talk to you soon. Bye.